Happy New Year, everyone. This is Accendo Traders Weekend Wrap-Up Trade Plan for January 1st, 2009. Our first video trade plan for 2009. We're excited, and hopefully you guys will be excited about what we're going to be bringing to you in this new year. So each time we come together to work on our trade plan for the next trading session, we do the same things. However, on the weekend, we add a couple of things to make sure that we're prepared for any potential moves. We look at blogs and newsletters. We check our sectors for trends. We always look at our indexes, scan for new trades, and set alerts for the new trades. But most importantly, by having a trade plan, we are ready to release and spend time with our family. So let's look at last week. Look at that. All three major indexes ended up for the week. And now, all of our videos talk about how much we're down for the year. Woohoo! When's the last time we could say this? We are up for the year. I think we can say good riddance to 2008 and hello 2009. We just had a light volume trading week, although the market did end up for the week, as we were talking about up here. We can say that the S&P lost 38% in 2008, and that is the largest drop since 1937. And although we did have a good week this week with the market and the quote-unquote Santa Claus rally the last 5 days of 2008, the first two trading sessions of 2009, which means we still have Monday, is certainly look like it's going to happen, but it's been on light volume, and we all know that volume equals conviction. So it'll be real interesting to see what's going to happen here on Monday. During this week, the negative economic data continued to come out. The S&P Case-Shiller Home Price Index declined yet again. IS Index hit its lowest point since 1980. We had the Kuwait back out of the Dow chemical deal, and there was a sort of a systematic fallout from that the Roman Haas acquisition might fall under scrutiny. However, Dow has said that they will continue with that deal, but probably at a lower price. GMAC, as we talked about last week, received their approval from the Fed, and they did receive funding and immediately came out with a 0% financing deal. And of course, more details coming out about the Madoff Ponzi scandal. He had to declare all of his money on Friday. More celebrities are coming out that they were, I think it was Kevin Bacon and his wife. And also that there was a new Ponzi scandal that was stopped, a $23 million scandal involving Haiti, I believe. It was. Didn't get all the details about that, but again, protect your money. Know what you're doing. That's what our trade plan is all about. What's up this week? The big thing this week is going to be the jobs report on Friday. We may be all happy, joy, but that might be the pushback for this week. So really going to be gearing up for the jobs report on Friday. As far as tomorrow, we got construction spending, auto sales, and truck sales as far as news. After the market tomorrow, we have Mosaic. And, again, earnings season is basically over, so it's really light, waiting for Alcoa to kick the new earnings season. And that's the other thing. It's nice, and, we got the jobs report coming out, and that could be the beginning of the really bad news. But we also have to have the earnings start coming up. And when these earnings reports come out for the first quarter, that's really going to be interesting to see how the market responds to that. Before we look at the three major indexes, I want to make sure we take the time to remind everybody that in 2009, we're really going to be using Twitter to get our alerts as a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/Accendo Traders to sign up to get our free alerts. When we look at our sectors, there are plenty of sectors. When you have a move like this, plenty of sectors look good. But what I'm going to differentiate is, for the months we've been talking about the resistance of the 50 moving average. So I'm going to differentiate by just showing you some sectors that are actually above the moving average, some more than others. But I'm going to show you some sectors and some stocks, recommend some stocks based upon whether or not they're above the 50 moving average. So you can see the first up, since I have it here, energy. Energy, we like APA, RIG, SLB, love all those stocks. Also in the refineries, as far as oil, we have XOM to look at for there. Metals. The metal stock that we've been following is Nucor. Nucor has definitely been, NUE, been knocking out the box. Gold, we've been talking about gold for a while. AEM, ABX, definitely some stocks to look for in the gold sector. Coming down to drugs, definitely AMGN. There's several drug stocks that look good, but you can see we made a nice bounce here. Aerospace, check out aerospace. Look at that. Our favorite there, of course, is going to be Boeing. Next, we're going to go down to retail. Now, retail, we talked a lot about it here, about whether or not it was going to finally move up. So here we are back again at this resistance level. And that's the other thing to talk about it. Yes, some of these sectors have moved above resistance of the 50 moving average. But notice that we're also at another level of resistance where we were before. So I want to see if retail can get above here. What we were looking at before when retail came here before was Kohl's, Sears Holding, and Ralph Lauren. Shipping. Finally getting a shipping mention here. Dry shipping is going to be the stock that we'll look at for there. Coming down to internet, of course, we've got Amazon that we like in that sector. And then even telecommunications looks good, electronics look good, computer looks good. So definitely some stocks, some sectors to look at as far as being above the 50 moving average. Before we hit the sectors, we're going to talk quickly about the indexes. To get our full analysis of the indexes, you're going to have to download our full version of this video, and we talk about that at the end. But the Dow, we're above the 50 moving average, but you can see we do have a little resistance to go to get above. The NASDAQ, check this out. Not only are we above the 50 moving average, but we finally broke out of this consolidation pattern over the past couple months. And you can say the same thing for the S&P 500, above the consolidation and the 50 moving average. Okay, let's go to the education portion of our video. We're using the book Trading in the Zone by Mark Douglas. And we're on chapter 5, the dynamics of perception. And basically, as we started off last week, we were talking about that professional traders are able to see the market as a stream of opportunities. Regardless of the outcome of their trades, when they execute a trade, they see their setups based upon their trading plan, they execute the trade, they exit the trade based upon their trading plan, and they move on to the next opportunity. There is no fear of the market, there is no threat, there is no beta against them, they just trade. They're in the flow. And again, that's one of the main reasons we advocate paper trading, because you can train yourself to be in that zone, to be in that flow, because you practice it. So when you see it for real, you can actually enact upon what you've already done. You've done it before, so this should not be something new. So when it comes a time that when your trading plan is not working, and let's say you do have a series of trades that lose money, that you're going to have to determine what that is. Is that going to be 3 trades? Is that going to be 5 trades? Professional traders, when they have a series of trades that don't make money, they realize they need to scale back, possibly not trade at all, make refinements to their trading plan, because we all know the market condition changes. I mean, come October 2007, when the market began to go down and we were in this uptrend that whole time, you had to change how you're trading. Now, I talk to my parents all the time. You can make money in a down market. You just have to know how to do it. So what you have to do is to make your goal to be like the professionals. You have to be able to allow the market to be a stream of opportunities. But most importantly, you got to be objective. You don't care. Is the market going up? We trade that way. Is the market going down? We trade that way. If the market's going that way, we trade credit spreads going that way. You have to be able to be objective. You have to be able to act without any hesitation and make that trade. Light volume or not, you have to be able to just make that trade, because if you miss it, then you're going to start battling yourself about, I should have traded then, I should have made then. And you're going to, go down this other emotional roller coaster road instead of just focusing on it. If you miss an opportunity, fine. If you got an opportunity, fine. Make your trading plan, create your rules. As we've been saying, a good trade is one entered and exited based upon rules, regardless of the outcome. That right there is the trader's state of mind. That is the trader's mentality. So we want to thank everybody for watching. I again want to highlight the fact that Twitter in 2009 is going to be great for us, especially we're going to start the 30-day challenge back up, and we're going to be talking about, I'm going to be putting out there market internals are going to be on my Twitter account. I'm going to be talking about the diamonds and entering, exiting trades. You got to check out Twitter, twitter.com, AccendoTrades.com. Check out the blog. It's time, to get to be a paid member, step up and receive our daily videos. And as always, our podcast, subscribe, podcast.html. Thanks, guys, and I'll see you next time.